In 3 months, plug power has gone from $39 to $73, right back down to $35. What happened? Plug power is down 8% on the day and 20% pre-market. What's up, millionaires? Alexander Victor here with another moment of financial zen. And welcome to my channel. If this is your first time here, if not, welcome back. Thanks for coming back. I really appreciate you guys' support. Today, I'm doing a full analysis of plug power and stock. Okay, so we're going to take a deep dive into what has been happening over the past few months and what you could do to prepare yourself and set yourself up for success. First of all, Plug is a company that makes forklifts that are hydrogen fueled, but is set up to change the world in green energy as we know it. Plug Power provides supplies to big name companies like Nike, Home Depot, Walmart, and Amazon. Plug Power is trying to expand its fleet from inside the warehouse to in the air, middle, and last mile delivery services. Currently, Plug is developing drones which are going to last a little bit longer than the battery packs that we have on our drones today in order to supply those delivery services. Medium and heavy duty trucks are currently increasing in demand. As people order more things online, they're going to require more things to be delivered. And like services like Amazon and other companies that need to deliver things, they're going to be looking for those companies which are going to need trucks to deliver those items on the last mile. COVID kind of really changed the economy as we know it. People are less likely to go out and get those everyday needs and more likely to order those everyday needs online. When people finally do go out, they're going to go out for those services and experiences and social life, or take their girlfriends out to take selfies in front of colorful angel wings painted on walls. We are currently going through an entire shift in the way that we do things. Business as we know it is changing. We're moving away from the standard expectation of a 9 to 5 Monday through Friday job and moving into more delivery services. That company that's going to be able to deliver that last mile is going to be the company of the future. So how does Plug Power come into play? Plug is providing the picks and shovels for the future gold rush. Last mile delivery companies of the future will be needing companies like Plug Power to provide them with trucks that are fuel efficient and green energy. These last mile delivery companies will finally put the art degrees and the criminology degrees to use. You could tape them up behind your rearview mirror to block the sunlight that the visors don't get as you're delivering packages for Amazon. Plug Power plans to have 500 refueling stations across America by 2024. And I know what you're thinking. Yes, the bathrooms in them will be just as terrible as the regular gas stations. Plug Power will be powering aircraft. They didn't say when, they didn't say where or how, or even if the aircraft will be in the air as they are powering, but they did put it in their slide to make sure that they said they will be powering aircraft. One day in the future, it will happen. Plug also stated that they'll be expanding their operations to Europe. Apparently, colonialization works in reverse. Plug Power is also considering Plug definitely has a grasp of the market and with plenty of room to grow. So it passes the shit test. So if this is the case, why has Plug fell so much in the past few weeks? Well, it simply comes down to numbers. The math is messed up. So companies that are public are required to submit what's called these financial statements. You know, those documents that you're supposed to research before you invest in the stock, but actually don't. Instead, you get your information from guys like me on YouTube, but that's okay too. I do the research for you, so you don't have to anyway. But the point is, they have to report these financial statements. And when they're wrong, and they can be really wrong, it creates some issues. Let me explain. Plug found errors in its non-cash reportings, including how it classifies its costs. This is requiring them to redo their 2019 and 2020 financial statements. According to this article, the revised accounting will change how the company accounts for certain transactions and items, but it is not expected to impact the company's cash position, business operations, or economics of commercial arrangements. Hold up, guys. I'll be right back. All right, sorry about that. I'm back. All right, where was I? Oh yeah, 52% of Plug is owned by funds, and those fund managers are responsible to the people whose money they manage. They have to do the due diligence to put their money in places, and the way that they figure out how to do that properly is by reviewing the financial statements. So this is how it works. The basis of their research is done within the financial statements, okay? And so if there's something wrong with those financial statements, what it does is cause a knee-jerk reaction from the fund to quickly move that money somewhere else, because the basis of what they judge that of being a good investment is no longer is true. So they got to move the money to somewhere else. And that's what you see is going on. You see, if the fund managers don't move the money, it is very possible that they could get calls from the people who funds they manage with very angry customers saying, literally, why the hell couldn't you see this coming? Why couldn't you see the future coming? So all the public companies have to report their financial statements on public outlets. And the one that I like to use is Yahoo Finance. And if we take a look at what Yahoo Finance is reporting, we can see a couple things look kind of funky, all right? First thing I'm gonna look at is forward PE. Now, what forward PE is pretty much the future price to earnings ratio. It tells you what this stock would be worth kind of in the future, okay? So the forward PE for Plug, check this out, is negative 237. Okay, so the normal PE would be 15, right? So that means that you would need to spend $15 to earn $1 in income. But see, when your forward PE is negative $237, it literally tells you you would have to pay negative $237. Yeah, it doesn't make any sense. Something like the company would pay you $237 to earn $1 in income from the company, which literally makes no sense at all. But it's an algorithm, so the reason why you get that is because of with the way the math works. It's pretty much saying the stock is deeply, deeply undervalued. So the next statistic we're going to look at is shorts. So the shorts reported for Plug Power is 6.6%. And pretty much what that tells you is that the market sentiment that the price will go down in the future is about 6.6% probability of that happening, which is extremely low. Okay, so the reason why is 6.6% of the probability of the stock going down in the future is because of the current presidency that we have now. The Joe Biden administration is geared heavily towards clean energy, and Plug definitely is within that clean energy sector. So the chances of that stock going down is slim to none, because the government is literally putting funding in place and writing laws in order to promote these types of companies. So the chances of that failing within the next 3 years or so is not going to happen. Next statistic we're going to look at is return on assets. Now, the reported return on assets is negative 21%, which means that the assets have decreased in value about 21%. Now, how does this happen? This could simply be the finance team working for Plug depreciating assets to make the company seem like it's losing money. Now, why would you want to make your company seem like it's losing money? Well, the very simple answer to that is it's a tax benefit. Now, what this does, it makes Plug less liable to pay taxes in the future, and they can actually defer those taxes at a later date when they actually are making more income for the company. You see, Plug is in a unique position right now where the government really wants to promote companies that are green energy heavy. And so Plug, of course, their smart financial guys are going to take advantage of this situation. So let's say Plug bought an asset that creates fuel cells, fuel cell creation machine. Well, let's say it costs like $50 million, right? They take this machine that costs $50 million and they could depreciate it over time. So let's say this year Plug produced $100 million in income, right? And they bought this machine that cost $50 million. Well, they can say that the machine depreciated in value maybe 12 million in the first year. So let's say that 100 million in which they would owe taxes on, now burden to owe those taxes are reduced by the 12 million that was depreciated off of the asset that they bought. You see how that works? It kind of skews the numbers, but it really doesn't, because they still own that machine, and that machine still produces those fuel cells. So, and I'll explain this in a bit, but the more losses that they report, the less tax liable they are. And also, because the government is pushing so hard for these types of companies to be successful, I mean, the government literally has billions of dollars set aside. They're not going to let companies like Plug fail. So again, they're taking advantage of having losses for their company. All right, next up is income statement revenue. Now, Plug reported a loss of $100 million, which literally doesn't make any sense because this is income. It's not expenses. How does a company report losses of income? And so this is how literally they would have to do it. Let's say they go up to a company and says, hey, we're going to sell you this fuel cell, right? So they mark it as a sale on their balance sheet. However, they don't require the payment for sale to occur until a future date. This is called deferred income. Okay, gross profit is up next, and Plug reported a loss of $418 million in gross profit. And this could simply be more expenses than they actually had profits during this reported period. Now, here's where it really gets crazy. The same company that reported all these losses also has $1.3 billion of cash available. Now, how do you lose all that money but still have $1.3 billion available in cash? And it's simply smart accounting practices. That's all it is. And I'm going to go over this in a second. It's called window dressing. Now, what window dressing is kind of shady techniques that accounting can use to make the financial statements look better, specifically to investors, okay? So if you don't actually know how these financial statements work, our financial system is really just that screwed up. So total debt is 715 million, which is owed to the banks. Though they owe 715 million, you know the way that loans work, just the way that loans work for us, they don't have to pay back 715 million this year. So if they had whatever amount that they have to pay this year, it's called current liabilities. Now, the only debts that they are currently liable for is really the interest on those loans. Is when you take the current assets, that's all the money they're going to make this year, and divide it by the current liabilities, all the money they expect to spend this year, you get what's called the current ratio. Now, a good current ratio is 1, and a really good current ratio is 2. The current ratio that Plug is reporting is 6.7%, which is ridiculous. It's pretty much saying that they could pay their debt 6 times over and still be good, all right? So that's really impressive, especially for a company that reportedly lost all this money in the same amount of time and has all this money on the balance sheet. So Plug made all these reports, and these reports tell a story to 2 different entities that are reading the same story but getting a different result. Now, what the government is reading is they're seeing a struggling company that's also a green energy company, and they want this company to succeed. So these negative numbers is going to directly reflect in less taxes and even tax incentives going to Plug to help them out more. Now, when the investors read these negative numbers, they know exactly what the accountants are trying to say, which is, hey, we get money over here. All right, so don't be fooled when you see these negative numbers on the financial statements. They tell a completely different story depending on who you're asking. Plug is using these tax cheat codes to help line their pocket. Without the government support, small companies like Plug and other companies that are in the green wave right now won't be as successful as competitors that are overseas. You see, The American government has to throw its weight behind these smaller green companies in order to compete. You know, the Chinese government throws its weight behind Alibaba, Neo, Tencent, and all these other companies in order for them to be competitive in the entire world. So the American government has to do the same to our companies in order for them to compete on a global scale. So Plug has gotten to a point where, well, it's got to restate its financial statements. It's blown up over the past few months and it's kind of taken a downturn. So they're going to take advantage of this downturn, maybe push the stock down a little bit, allow newer buyers to come in now that the fearful ones had already left. Now that Plug has gotten themselves in this predicament of using window dressing a little bit too well to attract these investors, what Plug is doing is taking a shortcut like in Mario Kart. It's cheating, but is it really though? We can only see it as cheating because we as individual taxpayers don't have the same loophole opportunities unless we own a business, of course. But that is, you know, the perks to owning a business. America is a capitalist society, and that's just how the society works. In Japanese, they have a word for this, and the word is shogunai, which translates to you really can't help it. So what happens after they finish adjusting their reported statements? Well, what's likely going to happen is they're going to end up owing a little bit more money to the government. That's money that they can still defer to future income. The bottom line is, buy the shit now. My analysis shows that Plug is still trending where it's supposed to be. So don't come to me a month from now talking about that you ready to buy and is it still too late? Buy the sucker now while it's still cheap. What are you waiting for? I can pretty much guarantee you're going to double your money within a year. Even at the worst case scenario, this is a good buy. This opportunity will be gone by the end of the week. Even if you don't like the stock, buy the options. If you're a day trader, just buy the options and get out when the price runs up. I'm going to show you exactly how to take advantage of it. Check this out. This is crazy. I can literally buy Plug today at a future price cheaper than I could buy it today 100 individual shares. But with the future price option, I have the option to sell it anywhere between now and 9 months from now. It's going to be more profitable. It's literally at a discount. You can't ask for more. When the option tells you the break even is negative, it's pure gold. You can't beat it. Sure, you'll end up paying $3,800 today, but the future value of it is a 71% return on investment. And that's the worst case scenario. You're going to gain about $2,178 from it. So today you would spend $3,800 on it. But by January 2021, unless fossil fuels become carbon negative and renewable in 9 months, Plug will be at worst case scenario $60.56, which means this option will be worth $2,178, more than what you bought it at. This is a return of 78%. That's 10 times more than the average investor makes in a year, and you're doing it in 9 months. The real risk you're taking here is when Plug makes those new financial reports, they may end up owing a lot more to the government. But that can still be deferred. You see, the government really doesn't want to put too much of a burden on this type of company, because if you're trying to shut down a green company in this day and age, it's going to be political suicide. So they're pretty much going to get away with it. If you're watching this in April of 2021,
It's too late for you. You're already in the hole. What the fuck are you talking about?
you should have bought 2 weeks ago when I tried to warn you about it. Thanks for making it all the way through, guys. I really appreciate it. And if you found this video informative, just go ahead and invest in that like button, subscribe, and get notified for future videos like this. I'm going to be posting more often, so if you want to see more of me, go ahead and hit me up in the Zinvest Discord. If you got a stock that you want me to value or something that you want people to know about, hit me up. I'd like to review it for you and let you know what I think. Okay? Other than that, don't forget, invest in yourself. Your future depends on it.